again, not just protecting the money, but at the same time, still having the ability to have some maybe guarantees that are in there for growth perspective. Those do exist. And those are very, very, I think, very important to have because it gives us both what we've just been talking about here. It gives us the protection and the shielding that we need, and it gives us the opportunity for growth that's there over and above maybe some of the rider guarantees that are in some of these plans. And then again, the peace of mind of not being able to outlive the funds to me is vitally important to make sure that nothing can avoid probate. These types of things, we say stuff like this, and it's not just saying it just to say it. These are factors that most people just don't think about. We don't want money going into probate and having to be settled within a court to get to the people that we love and that we want them to have those funds to continue on with their life, or they need those funds to continue on with their life. We don't want someone stepping in third party and having to try to take control of this and decide what you can and can't have or who's getting it. I mean, these are things that are just important. So these types of products have some of this protection built in to make sure that you're preserving not just your money, but preserving future generations, possibly, whether it's your spouse or whether it's children or grandchildren or charity. It doesn't matter. You want to make sure that your money is your money. We got to stop letting others dictate what's happening with our funds. And because in a lot of cases, the money's not ours. You made this point. We have a partner in a 401k. We have a partner in IRAs in these types of products. And that partner is the government, because the government is going to take X% out based on taxes because you've deferred that over your lifetime. And when I say X amount, we don't know what that's going to be because we don't know what tax code is going to exist when we retire. What brackets are we going to fall into? People say we can be in a lower tax bracket. There's no way for us to determine that's going to be reality. Yes, we lose a ton of deductions in terms of we don't have a mortgage anymore. You can't write off the interest. You don't have children in your household anymore, so you don't get the child tax credits. Maybe you're not working anymore, and maybe you were self-employed or had certain things you could write off with mileage and these type of things. You're going to get a standard deduction, plain and simple. So your tax bill might be greater because of the way the tax codes are. So these things are very important to think about. And these types of products have evolved so much, to your point, that it's something you really need to consider and get educated on and have a discussion on to see if it fits with your needs and where you're going in life financially. It may not work. It may not be the best fit for you. Maybe, but we need to find out, have a conversation based on where you are now, what you're doing now. How does that compare? You got to compare and contrast pros and cons. I mean, I think that's what you have to do. And I think that's what people have to start really realizing is there are other options for you